Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Well, it is Friday. Yesterday was quite a difficult day, and it looks like today we may be in store for more of the same. We're coming over here to the charts. Oh, you can see yesterday was a big down day in the treasuries, and look, like they're not stopping overnight. We are getting a retracement and a move back up, but oh man. So one of the things that happened overnight was that the UK put out their economic plan, I guess you could say. And the economic plan was basically like more spending, less taxes. The bonds did not like that. And so the UK got hammered. In fact, let's come back over here. You see the 6B. Woo! Ugly, ugly, ugly for the British pound. Not below parity, but it seems almost inevitable that it will get there. So treasuries are lower as such and showing no signs of turning down. And I'm a little bit, this is definitely not what I thought was going to happen post FOMC, because FOMC, I was like, oh, finally the market seems to get it and is in line with, what is really going on and what is necessary to stop inflation and what the Federal Reserve is likely to do. And now that they're in line, they are raising expectations again. Meanwhile, in the S&P 500, they are falling down too, with many analysts, including Goldman Sachs, now saying probably 3,400, 3,100. Well, that could be a really quick fall. Like, when I look at a daily ES chart and I want to look at 3,100, like that's just like, ooh, that's a little scary. So 3,100 would be like what, 35% decline. So we don't want that. Oil also falling this morning, natural gas, gold, and silver. Ooh, wow, gold getting hammered. Oh, and they were doing so well this week. That sucks. And copper, the metals just destroyed overnight. Wow. And, man. Well, Bitcoin somehow continues to defy gravity. I've been reading a lot of stuff suggesting that like some of these exchanges are like trading like record amounts of volume, and it's like it's all fake. So like somebody is wash trading to try and prevent this from going any lower. And then we got the dollar well above 111 now. It's a blood red Friday. I hope not. I hope not. Let's do some ambient today. Hopefully that makes it so that things don't get too crazy. We're at 375 now, really? Because yesterday, because yesterday we were like at 3.7 and then we rolled back and I was like, okay, that's a little excessive. Now that they're already at 375. Yeah, by this rate, we'll be at 4 by Monday. It's like, I'm not so sure that this is sustainable. You're bullish on indices today? Man, just everything that I read, like sentiment, there might be some reasons for there to be buying today. I don't know. We do get like next week we're going to be dealing with end of month flows, so that should be interesting, and then we'll shift over to October. We see where we go. But like the sentiment is all negative. Like all of the analysts are negative right now and are like bringing down their estimates and stuff. Yeah, Levi says bearish. But I am starting to think that this may approach a breaking point of sorts. This doesn't mean that like everything's gonna fall apart, but you know, like yesterday, basically the Japanese yen stepping in, that was a breaking point. By the way, I didn't even. I should just come in here and draw a line or something. No, not that one. I want like a ray that goes on forever. Okay. Let's see, so that if we're getting close to that will. Anyways, so what's basically what's happening now is the interest rate increases are putting pressure on other countries big time. All of the money is coming into the dollar and coming out of other places. But part of that is because people are just scared overall, but part of it is also that they want the US bonds, right? Yesterday, the Japanese came in and did currency intervention. I really wonder if the selling that we had in interest rates yesterday was the Bank of Japan selling treasuries to fund their dollar buying operations, which is a little concerning. Like it's kind of, I mean, I hope that that's not what they're doing, because it's like you're trying to protect your currency, but then in doing so, you cause interest rates in the United States to rise, which just exacerbates the problem that's been driving money out of your currency. So you might have saved the currency on an absolute level, but in terms of the flows, in terms of the incentive for people to get out of your currency, you've given them more reason to want to get out of their currency. Is just that the traders aren't going to try and fight you, right? The traders can be like, okay, we'll buy. Don't shoot. That's a little bit of a problematic situation. And now we're starting to see problems with the British pound. The euro is getting weak. At what point do those result in breaks as well, and governments have to start doing? Lightning says trying to be informed but clueless. Yeah, well, so we really gotta think here, because yesterday did not go well. It was not like a disaster or anything. It was actually, for me, an average losing day, but I got it completely wrong. I thought that the Bank of Japan coming in and buying things would buoy interest rates, and it was the exact opposite. That's why I'm like, if it was that the Bank of Japan came in and sold their treasuries to fund it, then I really messed up, right? Because that's like one of the biggest, strongest flows you'd ever get, and it was like sitting there all night ready to go and sell on the open, and we didn't know about it. That makes me feel a little stupid. You know what I mean? That makes me feel a little stupid. So we just have to acknowledge the fact. Listen, the problem with my strategy is you have to know what's going on. And if you don't know what's going on and you take the trade, you can get hurt. If you really believe in what you're trading on and it's wrong, then, you know, so we have to temper that. Like, we get a loss, that means, hey, we don't completely understand this market and we might need to sit back and or adjust. So I think that's what we're doing here today. Like, normally I would be like, well, maybe we'll sell again, but then they already sold a ton overnight. So can it really actually continue selling? I don't know. Well, I need to check. I don't think that there's any major news here. Okay, so we do have US S&P services and manufacturing PMIs. So that is going to be important stuff. We also have Fed's Powell speaking much later at about 10 o'clock my time. Is that what degenerate gambler means? No, degenerate gambler means that you're taking on excessive risk or you're doubling down. And there was one point at which you made money, but so there was a couple of these guys. Man, it's funny. So we got Gamma Trader and Toucan. They're on Discord. These guys have been around forever. I have to say, guys, when you're looking around the trading community, like there are a lot of influencers, for instance, on YouTube. Really, really new. They've only been around since the pandemic, if not since then, right? All these kids getting in and all of a sudden they're day trading influencers. And I'm sitting here like, well, I know a lot. I know a lot more than the average retail trader. And I feel that I've taught you a lot of really valuable information on this channel, but I don't have it all figured out. And yesterday is a really good example of that, right? But we have in this community a really, really long and established group of traders. There are guys that are here like every day. You know, like you guys don't just come around. I mean, there's some people that come in. I would say like maybe half of the people that watch the stream, they'll be in and then they'll kind of go out. But then there's this other half that has just been here from the very beginning and they keep coming back. And it's the same with the Discord. There's some of these guys on Discord have been there for like the full 5 years that it's been going, including those guys that are listed as degenerate gambler. Because basically what happened was I said, if you show me like a real broker statement, then I'll put you in a special group, right? And there was a bunch of these guys that were consistently making money at the time, and I would think that they're probably still doing pretty okay. And they were like, no, I don't want to be in the elite group. Put me in the degenerate gambler group because I'm just taking on excessive risk, and you shouldn't follow me. You shouldn't listen to what I say. So that's why we created the degenerate gambler group. And there's also one, there's actually two degenerate gambler groups because there's another one that has a pink username. So that's what that's all about. Is it pink? I don't remember what. Now I have to go back. I don't think that it was. I don't even remember who it was, in fact. Let's see here. Server settings. Roles. Oh yeah, there's the kind of reddish pink degenerate gambler, and then there's the purple degenerate gambler. That's what it was. And who is the purple one again? I don't remember. Display role. Purple D. Oh no, it's Toucan. Toucan is the purple one. Yeah, Brad's right. You don't know what you don't know. Well, I knew that when it comes to the Forex market that I am not as informed. But I really thought I understood what was going to happen from Bank of Japan intervention. So like, here's the thing is that I went in and like, I tried doing like a more serious study. So I went back to all of the times that there was intervention in the Japanese yen and comparing interest rates and so forth. And I didn't see any evidence for this theory that when they do that currency intervention, they have to sell bonds and so forth. So, but I did kind of find in a couple of news stories hints that like that's how they were funding it, that they were selling their securities. And Zero Hedge also, when they were talking about, because on yesterday's Zero Hedge, they spent a good portion of their end of day synopsis talking about the interest rates. And they weren't really sure why it had moved so much either. They were kind of like, well, there was some other central banks that were tightening, and there was some corporate issuance yesterday, and then there was rumors that the Japanese were selling their treasuries. So it was listed that rumor. I kind of wonder, sometimes I wonder if Zero Hedge watches our chat. But I don't think anybody's really quite sure. We'll probably find out next week if something like that was really going on. Like once the transaction is long done, then they come out and they tell you. So it's good to see the S&P 500 testing lows. You'll start buying at 3,500. I don't know, man. So that's the funny thing is, remember earlier in the year, there was some downside targets, like especially when things were getting ugly in the summer, right? I think Goldman was the first one to put a 3,400 target down. And a lot of analysts were really looking at 3,400. And then when things started going up, I guess they all adjusted it. And now they're starting to get bearish again, but this time it's a little bit more varied. And I'm seeing some analysts saying 3,000. I'm seeing some analysts saying 3,000. Now, I think that you got to take those kinds of estimates with a grain of salt, because what they're doing is they're saying, here are the economics of it. And so this is where things should probably go based on the economics. If it was like a 3-year time period, that sort of analysis would maybe work. But especially on a day-to-day basis, it's not very useful. We have to look at flows, and you can get a situation where lots of flows come in long, although I don't think that that's what anybody's expecting right now. But I'm just saying the numbers are going to be based on the orders that people take. But again, this just comes back to, wasn't this what we were talking about last Friday? It's like, why am I not just selling everything? Why am I just not selling? Well, I don't have any confidence that if I sell everything and then try and buy back in lower, that I'll actually get lower and that it will be worth the costs and stress of like managing my portfolio in that way. And I think that it's better to just buy and hold. Yeah, they're using the PE ratio to make these estimates, but that's not accurate as well. You're right. A lot of it is PE ratios, or some of them are. Wouldn't say that that's universally true, but some of them are, yeah. This is this guy in Discord saying, even showing an SMB capital short, saying that even pro traders find trading more difficult this year. Well, if you're an equities trader, I don't know. If you're an interest rates trader, you're probably doing okay. I look at my results this year, and one part of me says, hey, you know what? Like, you've finally zeroed in on things, and you've been really smart about when you choose to get in and everything, and should be proud of how I've been doing. But another part of me says, yeah, but interest rates have been just careening down, and any idiot should have been able to make money off of that. and then there's another part of me that says, like, you did do good, but you should have made way more. You should have been like sizing up and have $100,000 by now, Seth. What's wrong with you? That's kind of how I feel. But again, I wonder, like, at what point does this break? Because before it was like, okay, I think that, yeah, another 100 basis points of hikes and everything, probably appropriate. All these people expecting the Fed to pivot are probably silly. Don't really know what's going on. And, you know, there's still things like, I do think that unemployment is probably going to continue to be good. Because I think there's some other larger time frame sort of things that are, like a lot of people are just leaving the workforce because they're old, right? So the millennials' time has come. Is really what's going on here, and you're gonna have to start paying them, corporations. I'm sorry, it kind of sucks. You're probably gonna take a hit to your productivity for a while because you're paying them more, but this is when you're gonna be able to get the most out of them. And you've been screwing millennials over for their whole life. It's time that you give them what you've been holding back on. So that's gonna mean that you're gonna continue to have a tight labor market. But what I'm seeing now is that the interest rates on their own don't seem to be enough to really have enough of an impact on their own that it would be like a hard landing, like a real disaster. I don't think that that's the case, at least from how we've seen the interest rate increases that we've had so far affect the economy. I don't think it's too big of a problem. And I don't think that 4% is too crazy. I think that the economy can handle 4%. The problem is sovereign nations can't, right? And if we're going to have crazy inflation in Europe and the problems they're having in the UK, and they're like continuing to have energy crisis and all of that sort of stuff, that could, that on top of everything could create a very nasty recession. So I am starting to wonder if we're not at peak rates this week, that like maybe next week, maybe the week after that, I don't know, that they chill out because the economy starts to get a little dire. And hopefully that means that the Federal Reserve only raises 50 basis points next meeting instead of 75. Yeah. The next thing is going to happen. It's bad accounts, and then the guy's notes come. I heard the UK. Yeah, so you want to talk about the UK stimulus. So I didn't get like too many details on it, but let me read. The Fed is finally seeing the magnitude of the mess it created, and yeah, I just can't. I'm kind of looking back on things. I'm still a little mad that they let the housing market get so crazy and not back off. Like they really shouldn't have kept rates low for so long. They really should have, like, as soon as the monetary stimulus came in, they should have started backing off. Oh, where do I have it? Secret of B-21 Raider to be unveiled to the public in December. I'm excited. I think that it's too far back now. Okay, well, basically, the gist of it is this. So first of all, you got to remember that the people in the UK that are in charge are conservatives. Oh, so think of them as like Republicans. Of course, the parties in the UK are a little bit different, right? Like I think people are always kind of confusing. Tony Blair was a liberal, but him and Bush got along really well. And anyways, I digress. It is conservatives, and so they're taking a conservative approach to this, which it basically means reduce taxes. Like, look, I'm all for lower taxes and everything, but it's more complicated than that. And the big issue that I see with Republicans and stuff is that, like, when they come in and they try and reduce taxes and stuff, really what they're doing is they're reducing taxes to give their buddies more money, and they're not actually doing like targeted moves to actually solve problems in the economy that are like holding people back from starting businesses and stuff, right? So in other words, yeah, you're going to stimulate the economy with lower taxes, but that doesn't mean that the money is going to go to where it needs to go to resolve the supply side issues, especially with the way that you're handling energy. Because like, again, like, here's the problem. We are looking at like a historic disaster of a winter for Europe because of the energy policies. And the move that they make every time, just go and pay people off, is not going to create an incentive for people to go and create more oil and gas. Maybe it's intentional. Maybe they know that if they did the economically sound thing, maybe they would. Maybe if they know that if they did the right thing, that would keep the oil and gas industry. It would help the oil and gas industry, and they don't ever, because they think that if we don't destroy the oil and gas industry now, that we're all gonna die. So I don't know. You're one of the most consistent wait, is that Ace? Or is this a different Ace? We were talking about Ace, we're like, you should come in and say hi, and maybe this is him coming. That was fast then. Non-egoic streamers I've seen. I don't know if I'm non-egoic, but you know, I was thinking, oh wait, what do you think about Zero Hedge as a media? I was reading them a long time ago for fun, and it was, oh yeah, no, they're terrible, Radoslav. they're totally. So here's the thing. You have to read Zero Hedge, because they post all of the stuff about like what the Wall Street analysts are thinking, and I haven't found a better source for this stuff. I really wish it wasn't the case. Like, I got a Bloomberg subscription. Bloomberg doesn't tell you that stuff. It's so annoying, right? Zero Hedge is the only place that you can get it, and they are starting to put more of it behind the paywall. So maybe now it is worth it to get the paywall, right? But you're right. I think that they intentionally prey on fear, that it's always all doom and gloom all the time. Central banking sucks. Whatever decision a government is making, it's the wrong one, etc., etc. And that drives more views to them. I do think that they play that. So it's kind of like you have to use them because you can't get that information anywhere else. But you also just have to remember what their bias is. And because they're really, really good at being like, see, we're right about everything, but they're really not. Like, especially post 2008, you know, they were always predicting doom the whole way, and we kept going higher. And you miss out on a lot of money if you just blindly traded their sentiment, right? Of course, right now everything is doom and gloom. So they're probably going to look even better in the short term, right? Not most. So like thinking about ego, like I've been sitting here on TikTok, and I'm like, maybe I just need to go like full G, right? You know, like just start pretending like I'm Andrew Tate or something like that. I told my wife, like, well, what we really need to do, because clearly people on TikTok care about things like how rich you look and so forth. So I guess that means that we need to like go and hire escorts and all of these sorts of things. And she's like, well, if it makes us money, then go ahead. So if you want to contribute to the Speculators Seth Escort Fund, just put your YouTubers care about clickbait and top step referrals. I'm the longer this goes on, yeah, just rent a fancy car and take a picture next to it. Well, I think I will take a picture with the truck. Like here's one of the things is that I kind of prefer to be low key, which is like I'm not looking to attract every Yahoo that possibly. You do have Andrew Tate, the shaved head. Yeah, I'm telling you guys, hair is overrated. Hair is overrated for men. Anyways, I'm not looking to pick up every little Yahoo that could possibly ever be coerced into day trading. I'm looking for the people that they were born to trade, and it almost doesn't matter what you tell them, they're going to want to trade. And you know, probably they've been trying for a long time, and they're not quite sure why they're having problems, and hopefully they come here and they say, oh, this guy, he can actually, you know, show me like research, and it's really deep, sophisticated knowledge that you're not seeing anywhere else that really answers a lot of the questions behind why markets are so hard to trade, right? That's the hope. And so if you're gonna like signal to people, you want to signal things that serious traders are going to go and say, oh yeah, he definitely does trade, and he definitely is following this. One of those things that I do is I want to show people what is going on in the news and point them to what pieces of news are more significant. Like yesterday on TikTok, I should have made a TikTok, but I just had all this stuff going on. But yesterday on TikTok, everybody was talking about the Federal Reserve. Everybody was talking about the 75 basis point hike and what Jerome Powell said in the meeting. And I'm like, okay, this Fed meeting, forget about it. It's old news. It doesn't matter. He didn't say anything interesting. He didn't say anything unexpected. At least for those of us that live and breathe this stuff and follow obsessively every word that comes out of the Federal Reserve, none of what he said yesterday was surprising, right? But we had this Japanese yen intervention. That's a big deal. Are you taking along or just yapping? So when I came in here, it's funny you say it that way, Octavius, because you know the right trade is long, right? But like, I'm a little weary about it. I'm not. This long right that we're getting right now looks more like a retracement of the overnight move, probably because people have been, you know, people came in and had to sell yesterday. Like the Japanese, maybe they were selling their treasuries yesterday, and that's why we moved down. I'm not sure that move was really justified by the fundamentals, or that like there's future orders coming in that are going to be overwhelmingly short. I'm not so sure. And so to see this long right here, this doesn't look to me like a large block order going long that things are chilling out. And I don't know. I mean, it is very we have justification in the order flow and the trend. Maybe not so much in the correlations, but overall, I think that there's enough in terms of like the technical indicators on their own to want to try and take a long. But since I'm not really have a strong reason to believe that it's going one way or another, I'm a little bit nervous about taking a trade on here and it coming down. And especially on like a no news Friday, those are kind of like, so Fridays can be so hard sometimes. I think the problem with Powell was that he didn't say anything positive either. Well, here's my opinion on that. This one. So I think one of the big things that like the larger public doesn't realize is that these meetings are a relatively new phenomenon. In fact, I think I've seen almost every Federal Reserve press conference ever. I may not have sat and like watched through every little bit of it like those early ones, but I remember when they created it and stuff, and I've definitely watched every one for the last 6 years, right? Most people, they think that this is something that's always been going on. So why did they create it? Well, after the 2008 crisis, the Federal Reserve and other central banks felt that forward guidance would be a useful policy tool. So if we want to keep interest rates low, if we come in and say, yeah, like interest rates are 0 right now and we don't intend on raising them for like another 2 years, that was lower forward guidance, and that would affect the interest rates. People would trade on that expectation, and it would create easier monetary conditions. And so it was useful to them from that perspective, right? To keep everybody's expectations, future interest rates low. Well, now we're on the opposite end of the scale, right? Now it's interest rates keep rising, and all our estimates about what inflation are keep rising. The way that the interest rates are going right now, it could just be, you know, short-term demand that people have to sell. Kind of seems a little bit overdone to me, but it could be that people are now upping the ante again, that they think that even in 2 months that inflation will still be high and that the Federal Reserve will have to raise interest rates even harder. That could be what's going on. They could be just raising their inflation expectations again. I don't know. But when you get into that kind of world, the forward guidance kind of ends up being a little bit problematic, doesn't it? Because especially when you end up being wrong, like over and over and over again, right? Like it's been a little bit of a challenge for the Federal Reserve, because I can see it. Like, does the Federal Reserve have a credibility problem? Well, they don't have a credibility problem with me. I understand why they're making the decisions that they do. I think that they have a reasonable framework. They take into account different risks. They probably overestimated the risk of another wave of COVID creating deflationary pressure. Okay, they made a mistake. They're going to make mistakes. I'll forgive them. I'm mad about it, but I'll forgive them. All right. But when I go on TikTok, man, like none of them, they're like, oh, the Fed is going to be wrong. There were so many of them that thought, well, inflation is going to come, you know, they don't need to keep raising interest rates. Well, at first it was, they're not going to raise interest rates. They can't do it. They can't do it because it would cost the government too much. Well, it happened. It happened. But so from that perspective, like, Fed does seem to have a credibility problem. And if the whole issue here is you have to convince the public that you're going to get inflation under control, it's kind of a problem. And so I think we have to ask if the press conference helps in this kind of an environment. That doesn't mean don't have the press conference, but it maybe means don't go on as long. You know? It maybe means come out and say the mean scary thing to shock markets and then leave. You know, I think that when the interest rates are low and you're trying to keep monetary conditions easy, then you want everybody to feel comfortable, and you want to create an environment where people feel comfortable taking on risk. That's what they're trying to do, right? And when we're tightening, it's the opposite. You want to scare people out of taking on excessive risk. And in that kind of a situation, I think that it helps more to keep them on their toes and not actually say too much. You know? Like, hey, what if the meeting before last, when, you know, all of a sudden they're like, oh, actually, it's going to be a 75 basis point hike. What if they didn't warn that? What if they had not put that out on it to the Wall Street Journal, and we got to the actual meeting and it was 75 basis points, right? Like, would that have tightened monetary? Yeah, it wouldn't have had the reaction that they did, where like conditions eased after that, right? Maybe. So that's my opinion on forward guidance. Maybe they should back off a little bit. Okay, so there's a couple of questions here. So Mikkel asked what we're trading. I trade treasury futures primarily. Now, we have order flow for stocks until the end of the month. So if you have a stock that you want to watch, I would love tickers symbols. We'll pull them up, right? I'm not sure if I'm going to take a trade today or not. I'm kind of sitting here watching, seeing if the treasuries are going to turn around or not. Like, the thing is this has been a pretty strong and consistent buying trend, but when I look at how many contracts it's going through to do it, like if there was a 5K iceberg there, I think they'd have a hard time filling it. So how do you get stock data? So my last video I talk about it, but DX Feed provides order flow for stocks. It's I forget how much it is. I think it's like $70 a month. And they have a coupon code that works until the end of the month that gives you a discount. And so it basically comes out to like $43 for the first month. And yeah, it gives you full NASDAQ total view depth of market for all NASDAQ stocks. So, and in fact, I have, where is it? Oh, here's Ford. We should switch this one. Nope, that's not what I wanted. That's not what I wanted. This one. We should switch the symbol to Apple. Make that one Apple. Yep. So it's an interesting setup. So basically it comes in through NinjaTrader, and then I'm using the bridge to send it over to Jigsaw. Is how that works. But it's a plugin for NinjaTrader. And you don't even need the live version of NinjaTrader to use it. Now, the downside is you can't enter orders through it. It is just the level 2 data. So, like, what I would be doing is, watching the DOM or a chart with my order flow indicators on it to, make a read of the order flow combined with what you know about, what might be driving that stock that day. And then, go and enter your orders in Fidelity or whatever, right? Yeah, do they have it for DXV for Bookmap now too? There was there was a number of platforms, and I forget what the platforms that they had it on, but it's full view. So like the basic gist of it is order flow used to be kind of hard to get for stocks, like it existed, but it wasn't very popular. Now it is extremely accessible. I feel that if you're seriously trading stocks, because you're probably going to want if you're over the threshold for the pattern day trader rule and everything, you're trading a $25,000 account, right? I think that you should be able to afford $70 a month for order flow, and that it's going to assist your trading significantly. So for stock traders, I don't know if I don't see myself moving over to being a stock trader anytime soon, because I don't want to spend all of my time studying individual companies and seeing what might be popping off the next day. But new to order flow, and I'm investigating Bookmap versus Jigsaw. I have a NinjaTrader brokerage, and I like NinjaTrader charts. Yeah. Well, so you might end up doing what I do, right? So I have a video about this on the channel too. It's about Rhythmic versus CQG. So the basic gist of it is that there are a number of different data providers, but like 90% of retail day traders are using either Rhythmic or CQG. And Rhythmic has a feature where there's like a plugin mode. So you use their RTrader Pro program, and then that can forward the data to NinjaTrader or Jigsaw both. Because if you have two connections to your data, then you have to pay the professional fee or whatever. It's stupid. Okay. So instead, you want one connection and share it, right? Well, with NinjaTrader, they've kind of they used to fully support Rhythmic, and over time, they've kind of reduced it. And so if you have a really old license, you can connect with Rhythmic. But the new licenses don't give you Rhythmic. You can only use CQG Continuum through NinjaTrader brokerage, right? But if you use the free version of NinjaTrader, oh, that's interesting. Did you see that? Okay. So there was a big order at 23, and it looks like, oh, okay, it was the bid 23, and he moved it up to 24. He chased it a little bit. I'm using the Rhythmic. The data feed is super nice about the play. Yeah, their Rhythmic application itself is kind of like, what? I think that it was kind of designed for a different kind of purpose than what we're using it for. But it doesn't matter, because you pass the data to NinjaTrader and Jigsaw. So that's what I'm doing, is I'm using So I don't have to use the NinjaTrader bridge. I pass it directly to Jigsaw, and I pass it directly to NinjaTrader. But then I do use the bridge for the DX feed data, right? And that comes in through NinjaTrader, and I pass it over to Jigsaw to show this DOM, which is kind of funny. And I don't think that it was intended to work like that by Jigsaw. It just happens to work because they're really robust. Which brokerage you use? I am using EdgeClear right now. So I've tried different I've been with AMP, I've been with NinjaTrader. I actually liked AMP better than NinjaTrader, to be honest with you. But I think part of the problem with NinjaTrader was like I couldn't use Rhythmic. They told me that I would be able to use Rhythmic, and then I couldn't because they shifted. So I didn't like that. And then there was an issue I had where it prevented me from trading for no fault of my own, by the way, and it took them like 2 days to fix. So that really bothered me too. So the issue that you get with these discount brokers is the level of support that you get is kind of depends on who you get. Maybe the guy that picks up your support ticket really knows their stuff, but maybe they don't have a clue, right? And so when you go to the other brokers, so EdgeClear, you are paying a little bit more for your fee, but the people that work there are very, very knowledgeable and take care of issues, and they really hold your hand if you want, right? So when I came in, I don't think that they had anybody that was really coming in to primarily trade micro treasury futures. So we had to sort out a couple of things, but they got it fixed. They got it fixed. So yeah, I use EdgeClear because I like them. Okay, so there was some other. I want to go like back here because there's a couple of things that I think I missed. Okay, Radoslav, that was the one that I wanted to make sure that it was saying, that's me doing the retail stuff and losing. I started studying the DOM futures and all the good stuff, and now I understand what you're saying, and I love the stream. Oh, thank you very much. I don't think I'm quite there with all of the YouTube content because I don't think that everybody that watches the videos fully understands the overarching theme. Like, they hear me say it, but they might not understand how important it is. But markets are very statistically efficient. So the order flow is really useful, but I would just be careful about like making all your decisions based just off the order flow or just off the chart, because the market's not informationally efficient. That means there's all sorts of information that we can have right now that would tell us with a very good chance what the future order flow is going to be, whether it's going to be long or short. And that's going to outweigh anything that you see on the chart. And once you understand that the market's not informationally efficient, like trading is a completely different world now. There's this, it's like most retail traders aren't even playing the real game. Essentially, they're playing this made up mini game in it called technical analysis that doesn't really work. Kind of keeps you from actually learning what's really going on, you know? Okay, so, and then there was also a comment by Ace here, right? Oh yeah, okay, so YouTubers care about clickbait and top step referrals. So after the whole kerfuffle with Earn to Trade and it being founded by a guy that was basically scamming people with a scam exchange, I said I don't want to do because I had a referral link from them, but it was just like in Discord, and I don't think anybody ever used it. I don't think that I ever got paid by Earn to Trade. But when I made a video kind of harping on them, and I had to go back and forth with them because they thought that the thumbnail was unfair, and I think that they were right, so I changed the thumbnail. And then they did a sponsored video with me, which was kind of nice. But I'm really glad that I stopped doing the referral link for it, because I really think the reality is that there's no reason to do combines anymore, right? Like, if you can really trade, then just trade micros. You can literally start trading micros for like $400, right? Like the cost of 2 combines, and you can trade that, and you can probably trade that account for like a whole year, right? So why bother with the combines? The reality is that the combine has a really crazy target profit. It doesn't seem like it is, but it's actually a target profit that is very likely to lead you to taking excessive risk and blowing up. And so you pass the combine if you're lucky, but keeping it is really hard, and not very many people keep them. So there was a Forex combine, and they gave stats, and the stats on like how many of their funded traders stay funded was really crazy. Like there was very it was like this teeny tiny percentage of them that were able to keep it. And the ones that were doing that, the reason that they were able to keep it was because they weren't taking a loss. Their max loss was less than 1% on a day. So what does that kind of tell you about the combines? I'm not liking CQG very much. The platform seems to lack a lot of the features that should be standard. Well, so really, I talk about that in this video, but really, if you're using CQG, you want to be, you can get like the tick index and all of those sorts of things. You can pay extra for VIX. That's the advantage to CQG. The advantage to Rhythmic is you get more level 2 levels. What do you think about the newer I'm not 100% sure about which one you're talking about, but every combine that I've ever done had something set up where there was somebody that you could talk to once a week and stuff. So I don't think that that's all that new. But, I remember talking to guys and doing that sort of stuff early on, and it didn't actually help me. Like they just kind of said standard stuff, right? To be honest, I wish I had more time to mentor people. People from time to time have asked me like, oh, I'll pay you per session. But like the reality is you don't have to pay me. People message me all the time. I spend a lot of time talking to people on Discord, and private messages and stuff, and even doing like video conferences with people from time to time too, right? And I think that I have more to offer in terms of a mentor, because we understand that the market's not informationally efficient, right? So if we understand that the market's not informationally efficient, now we have this huge world of knowledge of how does the market actually work? How does this market actually work? And we know, like, the reason we have a market is because there is more information out there than any one person can ever possibly know, right? So having an old experienced person that knows a lot about those sorts of things ends up being really crazy useful, because then you can come in and you can be like, okay, well, I thought it was going to be like this. I wish, if I had somebody that I could have talked to about, the Forex, that would have said, oh, well, probably the Japanese are going to have to sell some treasuries to fund that. So maybe we should be going short treasuries, right? That's the sort of stuff that you want to get. Or after the fact, being able to explain what was the thing that was moving the market, right? And I think that's one of the things that I hope that new people get out of this, is just seeing like, what is the environment, that might explain those particular order flows, right? So if I didn't have a day job and I had more time, I would set up a service where we could do Zoom sessions and stuff like that. But as it stands right now, I don't think that enough people are even taking advantage of it for free, right? And I think that most of you guys get what you want out of the stream, so. But you get what I mean? But like with the combine, it's not like they're bad. Like, it's not like the companies are bad or anything. Like, I think that a lot of the companies are trying their best. I think the reality is just that the product is not as valuable as it was. The reason that the product was valuable before was because you really needed to have like a $10,000 account to really stand a chance at trying to trade these things. And once they introduced micro futures, I think that the primary reason for doing the combines disappeared. And for any new trader, I would say fund your own account and trade conservatively. You're going to learn more from that than from doing the combine, because the combine teaches you a bad habit of taking excessive risk. That's why you get these people, some other YouTube channels, or there's all sorts of people around that they'll get combines and then they blow their accounts. It's because the combine encourages you to trade a strategy that is too risky. If you can come in and trade these treasuries every day and at the end of the year get a gain of like 30%, that's good. That's really good. That's what you should be shooting for. Right? Yeah, you can come in and like double your money like 5 times, but that's for me for real, and I don't even trade close to the max contracts and still blow up. Yeah, it's just... Trading platform industry is extremely competitive. Yes, it is. And the brokerage industry as well. Well, the brokerage industry is crazy. Like, so the issue with the brokerage industry, especially in futures, is that there are so many limitations on what you can do that it's really hard for brokerage to, for a futures brokerage to offer anything to differentiate themselves, right? Basically, there's the platforms that you offer, there's the service that you offer, and your commissions, right? Heard Apex. I think it was Apex was the one that... there was a forum thread about that one. There was like so the one about Apex, my recollection on that one, G59, was that it wasn't that they just like straight up didn't pay him. There was like a dispute, essentially. And there was like a big long thread on Futures.io where Apex presented their side of the story. Lulu pays you. Yeah, I wouldn't be so worried about them not paying you. And it's also true that some of them, that even after you get funded, that they don't actually they don't trade you a real account much yet. Yeah, you have to trade a fake account first before they let you do a real account. You're just wailing away? Really, Greg? So have you been doing lately? Because I remember there was like way back in, was it before the pandemic? You were a little frustrated. And I had thought that you had kind of pulled back a little bit, but if you're swinging big now, that's great. Greg's been trading for a really, really long time. This volatility is horrid, yeah. Well, so like this move right here, like this is like what? 6 basis points down now in interest rates? For no real apparent reason. You're 55 now? You just make me think about getting old. When you can, when the beard is a little bit longer, you can see it better. You're gray. And I look at that and I'm like, between the divorce and trading, probably, yeah. Probably I gave myself more gray hairs. Because my dad was not that gray at this age. In fact, I think at this point I'm almost as gray as him. Day trading can ruin your life, yeah. You know what though? Like again here, once you understand that the market is not informationally efficient, again, it's a completely different game at that point, right? And one of the things that I think makes that revelation so important is that now you kind of see like, oh, okay, it's a difficult game, but I know what to do. I know what it is that I have to be good at to be good at that game, right? I have to be informed, and I have to be able to make decisions on, because you're all these situations where you don't know everything, you don't know what you don't know, and there can be new information popping up all the time. Right? And so you have to be your very best, right? Now the psychology stuff makes sense from a completely different perspective, which is, just like if you were playing basketball, you want to be able to play basketball at a high level, you've got to be conditioned, and you want your brain to be smart. If you were playing chess at a high level, right? There's certain things that you're going to have to do to make sure that you're always your best to play chess, right? Now the psychology goes in that direction. What is it that I have to do with my schedule and everything else to be able to trade my best, right? And yeah, there will be times where you're not the informed trader and you're wrong. Like that was me yesterday. There was we don't know for sure yet, but there was a really key piece of information out there yesterday that I didn't have. And it may be the case here today too. I mean, I don't know. We may just be moving up on like no volume, but we moved up quite a bit here. We moved up 20,000 contracts here today for no apparent reason. And I don't know what it is, right? And how do you know when you're in that situation? And are you able to sit on your hands in that situation? But it's so much easier to sit on your hands when you know that, like, well, if I don't know something, there's like no point to trade, right? Completely. Isn't that a game that makes so much more sense? You're not in this fairyland of like, well, maybe you have these unresolved childhood issues that are causing you to self-sabotage, and we need to get you into the right, belief set to do all. That's like, what? And then you do all that stuff and you read the books, you read Mark Douglas and everything, and you're still having trouble. Like, do you think quant traders have an advantage in trading? Not in discretionary scalping. So here's the thing that you got to realize with quant. There are a couple of different sections of quant. Okay. One section of quant is high frequency trading, and now don't get me wrong, those algorithms are really complicated, and we've talked a lot about to some extent the algorithms that are at play there that they use to arbitrage with correlated instruments, account for the order flow that's going through, other machine learning sorts of things. And yeah, there can be very short-term signals that they're really fast and can react to, and you can't play that game, right? The other game that the quant traders play is more portfolio management. Okay, so for instance, a CTA is more about, here are all of the commodities that are available to me. I'm going to look at the ones that are moving up the most, and I'm going to allocate more money to those, and the ones that are moving down the most, and I'm going to go short those. And over a large portfolio, that momentum effect makes money. And that's like a CTA strategy, right? That's really different from coming in and trying to predict whether or not the treasuries are going to move up and down or down from here. I think the reality is that the quantitative models don't really know. I don't think I've ever heard of a model that's really good at predicting that sort of a thing. Maybe it exists. Maybe that's what Renaissance is doing. We don't really know. So again, like, the reality is the market's not very informationally efficient. So I think that there's just a hard limit to how much the statistical technical data can actually predict what's going to happen next. I think that you have to know what is actually going on in the market, and that is programmable, but not really right now. Like, there's real problems with automating a system like that. And so in that respect, there's a place for you as a retail trader. And like the thing is there's not very many traders like this left. So that means that there's actually a lot of room for you to work with, you know, because they don't have the prop desks at the banks anymore. That's what the sort of thing, you know, that those guys were doing. So do quant traders have an advantage? Yes, but they're not doing the same kind of trading that we are, right? In terms of speculation, yeah, they don't. There's a limited use to it. Doesn't HFT algos target discretionary though? Well, I wouldn't say that they target. I mean, the basic gist of it is that they're out there all the time, right? And the retail traders end up trading against them in a situation where the algo knows that it has an advantage because it's taking advantage of the correlations and stuff, right? So when we say that it targets discretionary, that's where we kind of think like, okay, I'm going to go in and I'm going to take a long, and then the algorithm is going to go, oh, Seth went long, so we got to push it down, right? Well, it's not that simple. There's nothing wrong with thinking that that's what happens. Like, that's not what happens, but maybe you might behave differently if you think that that's what happens, right? So from that perspective, it's good to think that that's what happens. But the reality is that they don't have to individually target you. The market kind of works against you in that fashion anyways. And the basic gist of it is that if you don't have an edge, if you're just a noise trader, eventually the market's going to get it from you. So the only reason that you should be trading is if you have an edge, if you have something that tells you with a very high probability that price is likely to move in one direction or another. Right? So the HFTs don't have to target you. They just have to trade against noise traders, and they make money. Because they have an edge. They have an edge that they're faster, and they have an edge that they can react to a correlated instrument. Jermax, welcome back. You've been here almost every day this week, haven't you? Actually, most of you guys have been. This is the first day that I've seen Greg stop by. I'm glad to see Greg because I hadn't heard him chat. We haven't chatted with Greg in a while. And, oh, there was a point that I was trying to make with Greg, which was like day trading can ruin your life. Well, if you know that the market's not informationally efficient, then you can kind of step in and say, well, I guess I don't know what's going on today, and stop. So number one, your losses are going to be smaller. And number two, when you lose, it's just to know well, right? Have you been watching almost every day? Cool. I appreciate you being around, Greg, because you're one of those guys that it's very clear to me that you've been trading a long time, you know, and so you always have useful things to say. And, you know, if you do have a losing day, it doesn't have to be like this identity crisis that I think sometimes it ends up being with technical analysis, right? Because in technical analysis, okay, especially if you're doing discretionary technical analysis, like price action, right? You're coming in, you're doing price action, you think, I'm really good at seeing patterns and I'm really smart and I'm going to figure the market out. I'm going to study it and I'm going to see the way that it tends to go. And then when you go through a period where it doesn't work, that's like your whole identity is crushed, right? Your whole identity is crushed. It's like, oh, I'm not good at knowing what, you know, being able to read the patterns or stuff. Well, it's not that you're not bad at it, it's that nobody is for starters, and B, that there's not really a consistent pattern to see. You just think that you're just seeing noise, right? So really, you get all of these retail traders that are getting all down on themselves over something that, you know, it's not really a thing. It's all just in their head. That the thing that they want to be doesn't actually exist, right? Whereas if you're trying to trade on informational efficiency, of course I want to be the informed trader, and it really pisses me off when I'm not the informed trader, But I know that I'm not always going to be the informed trader. So it's not like this world-shattering thing. It sucks that day. Definitely when I take a loss, it definitely affects my mood, and like it makes it harder for me to think effectively and stuff. But a day or two and I forget about it. And I'm back to focusing on understanding this current market. And a loss can be a really useful thing because it can make me go, okay, maybe I just need to not trade for a little bit. I need to go and do more research. Yesterday was a little frustrating because I was really trying hard to find something that would really tell me if the Japanese would just straight up sell their treasuries to do their currency intervention. I couldn't find it. And I just searched for so long and I wasn't finding what I wanted. How much do you think it will cost to make a market profile? What do you mean by that? I do have a market profile that I made in NinjaTrader that I could give you that I just didn't put it through because there's so I created an indicator for NinjaTrader that's really sophisticated. Basically what it does is, like in NinjaTrader, when you add an indicator, right, it adds another, what do we say, panel. It adds another panel underneath of the chart, right? And then you can have multiple panels. And what I did was I said, well, why aren't there vertical panels? If you add a volume profile, why doesn't it add a panel onto the right side like that? So I made one where you could add a panel and you could add multiple panels. So there was not just a volume profile, but like multiple versions of volume profile. But it was a little quirky, and I had to solve a couple of bugs to make it work on my machine. And I knew that like probably other people might have issues, and I would always be like doing support for it. And thank you, reminding me of PMI. But then not only that, but like there's just a lot of different ways to get volume profile in NinjaTrader, so that's why I never really put it out and like made it a big deal about it. I want to plot the market profile reference line. So do you mean like you want to have the point of control and you want lines for point of control and value area? We could do that. You can actually, with the NinjaTrader order flow indicators, you can actually set them up to do that. It's kind of a little tricky. But if you have a full NinjaTrader license, you already have the ability to do that. You just need to go into their volume profile and get these settings right. The heat map with NinjaTrader order flow indicators is bad. Their heat map is okay. I really like their large trade detector on a chart. Wow, Zowie, how to know the correlation for your market? For example, I trade ZB and UB. Only what other market can I watch to spot the value and things? Okay, so this is a good question. So that's a hard one. Yeah, you can use a Jigsaw's heat map with the bridge. You can. Their Vista chart. This one. That's theirs. I think it's pretty good. Well, ultimately though, the DOM is the useful thing. There's nothing that shows you that you can't see in the DOM. Okay, so for Zowie's question, a lot of it is just experience, right? For the instrument that you're trading, one that I would pay very close attention to is the Japanese yen. Okay, Japanese yen is the most correlated instrument with the treasuries. Okay. If you're trading UB, you want to watch all the treasuries. You want to watch what the yield curve is doing. But then outside of that, the most correlated instrument that you're going to see is the Japanese yen. Now, there's also correlations with the dollar, and there's also correlations with the S&P 500. And the funny thing about it is that those correlations kind of change depending on what kind of macro environment we're in. So the kind of analysis that you want to be trying to do is say, okay, the treasuries moved up and the Japanese yen did not. The Japanese yen barely moved. So why is that? Well, it just means to me that the interest rates are moving on their own, probably from the order flow that's coming through them, right? Whereas if they were very highly correlated, both of them were going up, that would mean to me that interest rates are lowering because the Japanese currency is stabilizing or whatever. Has some relation to that, right? So that's the way that I would approach correlations. Because if you come in and you say like this should always be correlated like this, then you're gonna have problems because they do switch, right? You would also the correlation with the S&P 500 is like a really great example, right? When we're in a tightening environment, interest rates are, you're gonna see the treasuries move down because interest rates are rising, and you're gonna see the equity indexes move down, right? But there's other situations where there's flight to safety, where the market isn't moving down because interest rates are increasing. In fact, the market is moving down because some other big ugly problem is out there and they think that interest rates will decrease. Then you'll see them move opposite directions, right? You'll see the S&P 500 tank and you'll see people buy treasuries. Yeah. Do you have any videos showing how? Yes, I do. I have a whole series. Actually, so when people ask these kinds of questions, I should really just go and find it. I should really just go and get you the link, right? So I have a whole playlist about the DOM. I want to be very specific. I don't have like what do we say? I don't give you like entry signals. All right. What I'm doing here is I'm teaching you what you're looking at, so you understand what you're looking at and you can come up with your own strategies, right? And I'm going to give you like really, really key empirical data that most people don't know that I think will really guide you in understanding the order flow. Okay. So that I have a whole playlist. It's like, what is it? There's like 5 videos in that. Yeah. There's 5 videos in that. So in short-term trading, if there is a volatility, then with volatility, there can be no correlations, and therefore robots can't really know the value of something because they are pricing relative value. I don't think so. So even in a really volatile market, the correlations do a pretty good job at keeping up. There are some situations where you as a human might be able to gain an advantage over the robots with those correlations, because the robots can only run through it statistically, whereas you can kind of use your informational edge to say, well, this should be correlated with this, and start trading it immediately. And so you might be able to find situations where the robot isn't fully taking into account something, and then especially if it's a light market. So it'd be really hard to do that in the treasury, but like in the NASDAQ, for instance, you might be able to, you know, find a good spot. Let's see here. We got 3 minutes to this news. So I was just making sure I caught all of these comments. You guys have been asking a lot of questions today, so. But Friday is a good day to do it. Friday is a good day to do it. We are going to get some news here in a second, though, that we may need to do something off of. So I'm going to bring these up just in case. So the services PMI, we're looking for a reading of 45.5, manufacturing reading of 51, and composite 46.1. This is kind of like a tier 2, tier 3 kind of release, but this kind of information has been more useful and influential in this latest economic environment. And we haven't gotten a whole lot of data this week, like economic data this week. So for that reason, it might have a larger impact than usual. Look at look at the treasuries. Like, they are pulling major time for this release. So the treasuries sure did rotate a lot, so I am glad that I didn't try taking a trade. I mean, I really should have tried taking a short, and I probably could have made money on the short, but I was late to the party. I'd probably be really frustrated. Basically, if I had tried trading it anytime in the last hour. Okay, here it comes. It's a very curious reaction. Does look like they're selling it though. So manufacturing was 51.8 versus 51. Services was 49.2 versus 45.5, and the composite was 49.3 versus 46.1. So all of those numbers were higher than anticipated. So the move in the treasuries to the downside is correct. It was a pretty outsized move. So in this particular instance, I don't think that we can wait for it to come back and maybe we can try trading it, but let's just see. The Japanese yen really puked on that too, by the way. So we might be able to justify going long rates somewhere in here if we can find a spot in the order flow that gives us a good spot. I think we would have to go short though, and there has been some pretty strong buy flows here today, right? And what about the liquidity? Well, so there's been a couple of large orders in through here, but overall the resting liquidity is a little on the light side. And there are some big sweeps in here in the treasuries too. I'm looking at my tapes here, trying to get an idea of what the flow is actually doing. It's mostly small orders still. Okay. So this is what I've been looking for. Okay, Brad Setzer. Japan's intervention renewed interest in the impact of central bank intervention in both directions, dollar purchases and sales on the treasury market. And then he has a links to a Wall Street Journal article. Some analysts expressed skepticism about that scenario, noting that the Japanese government is believed to have large holdings of US cash and cash equivalents, reducing the need to sell long-term treasuries. Japan has plenty of cash in its reserves, said Brad Setzer, a senior fellow at the Council on Foreign Relations and an expert on global capital flows. It is not at all clear it needs to sell treasuries. Joseph Wang says this is correct. There is significant circumstantial evidence suggesting that Japan is a sizable participant in the Fed's foreign repo pool. They have plenty of USD and don't have to sell their treasuries when they intervene. Thank you so much. I'm going to respond to him. Joseph Wang, I'm really quickly coming around to the opinion that for treasuries, Joseph Wang is probably the best person on Twitter to follow. Okay, so the treasuries are still kind of like fighting around in the liquidity hole created by the sharp down move. I think I should reset some of my DOM here. We'll put it 21.5 was the price from before the news. Okay. We'll see if they retrace all of that or not. There does get some evidence that there's still some weight on it. The oil is dropping below 80. That, man, oil looks like a disaster right now. In fact, yeah, it's down 5% today. Wow. Man, all of the commodities just got obliterated. Like this flow that we're seeing long could just be flight to safety. Could just be flight to safety. Okay, so there's a couple of things because you guys have been asking so many good questions. I haven't even really had the chance to go and like read back on Twitter. So Mohammed A.L. Arian retweets Squawkbots. What is worrisome in the last 48 hours is an accelerated loss of confidence in policymaking, says L. Arian. Let's not forget what has happened to flows. We're starting to see those technical dislocations. Even the treasury market is not functioning well. He's right. Like yesterday something broke in the treasury market. It was a very, very different flow yesterday. And the flow that we're seeing today is also very, very different. Like before the news, it was just a really slow and steady move up. That move back there was a little aggressive, don't you think? That move up there was a little aggressive. And the S&P 500 is dropping. This is starting to look to me like flight to safety, which we haven't seen in the treasuries in a while, but could be a good opportunity for us. Tobias thinks indexes should continue selling after this news. Yeah, that's what it looks like it's doing. There was, like, right when the news hit, a little bit of upside on the S&P 500, but it didn't really show any follow through and came back very quickly. Eye-popping surge in yields on UK government bonds. Absolutely. Bond is absolutely extraordinary. If this continues, and when combined with the fall in the currency, it's likely to entail a more aggressive Bank of England, a higher recession risk, and a larger probability of industrial action. Jim Iorio, remember to add in inflation when you are calculating losses on your assets. Yeah. Okay. Oh man, there's been a lot that we've missed here. For those interested, this is my original QT time bomb thesis from January. Since then, I think it's become even more likely. I focus largely on US supply, but sovereign debt is a global market and there's likely to be a huge issuance from the Europe and the UK. I had front rows to the 2019 repo spike. GC repo was 1 trillion a day in volumes, much cheaper than cash treasury. Rates usually moved a few basis points a day, but on that day it moved a few percentages. That greatly expanded my view of what is possible in a treasury crash. Tail risk, but fat tails, in my opinion. Okay, now I'm caught up. Hope Joseph Wing answers my question. Joseph, if you could just, you know, contact me on Twitter so that we could do an interview, I would love to do an interview. I'm kind of thinking they're going to move up, don't you? Let's just see. By the way, how are the spreads going here? Well, a little bit of flattening, but overall in the day, they've been steep. So that's not particularly helpful to us. If we wanted to go short rates. But let's just see. They're at 20. That looks pretty lackadaisical there at 20 and 20 half. No, my entry did not go the way that it should. It's not like it moved. So I'm not sure what to make of that. I could have gotten 715. Like what? May have gotten caught in a bit of a hole. There looks like on the move up that we had that it was maybe a little bit more dramatic in the 30-year. And that I think I may have misjudged where the liquidity hole is. Oh, shoot. Okay, so what I'm getting from this is that even if I had a good trade, this looks a little too volatile to me. Because that just moved down like 20 half to 17. That just moved down like 6 ticks like nothing. A little bit of volume trading there at 18 half and 19. The short-term trend looks up. At least this bar is up. I am seeing some volume coming in long in the 30-year though. And the S&P 500 still looks very sad. Okay, so at the moment, not super strong flow. Although it could shift very quickly. Yeah, this kind of makes this a tough trade. Hmm. Hmm. So what I'm seeing at the moment is that some of the ticks are on very low volume. So like that last uptick in the 10-year was 100 contracts. That one is 155. You get okay like stacks like that 47 now. That's to the upside. To the downside, there was actually a couple of them where, okay, so like for instance that one, they ticked down 489. So it seems like the bids are actually being a little bit more solid too, but you got to keep in mind that like there are enough market orders out there willing to sell. So that kind of makes it tough for us here, I think. There is a hint there on that last swing of some flattening. Especially the 2s and 10s seem to be flattening out. Okay. See, when it ticks, the buyers look like they just go, but at the moment it still looks like a long road back to like 23.5 if that's where they actually get to. They did recover that quick move down that we had though, so that helps. The 2 years rejected the FOMC release range. I don't know if in this situation that I'm less apt to pay attention to significant levels in the treasuries because I think that yesterday was driven by big order flow and that right now is probably being driven by an order flow. So it's really what's going to matter is the contracts, right? Well, they're starting to trade like more normal size, but the flow right now is not giving me a really clear indication. Also should keep an eye on the 6J here. The 6J looks kind of stuck in the mud as well. Does the data, well, okay, so the order flow data comes from your data provider. So either CQG or Rhythmic. And they kind of have an agreement with your broker. And they do aggregate to some extent. So especially when markets are like getting really crazy, they will kind of like aggregate updates. So it's only been 15 minutes since the news. That's interesting to me. This song is a little too weird for me. Sorry, Harris. It's just a little too weird for me. Not trading 19.5 yet. And the 30-year especially, not giving us many hints. And not a very strong bid at 19 either, right? Oh, now that's interesting. Okay, so we are starting to get low resting liquidity at 19, but there have been some big trades too. Well, that downtick they did 400, but so 19 is kind of giving us the signs. I don't know, if it was like yesterday when we had like 2,000 contracts on each side, that would be kind of like get us stuck in the mud. But under certain circumstances, we probably can bust out of this. Just a question of how long. I don't know. The flows don't appear to be too. They don't look like they're in a rush to do anything. Well, so okay, geez. When it does move down, it comes a little quickly, doesn't it? And that was not like the Japanese yen is actually kind of turning up. So I'm not quite sure what you can make of that. It's still not enough for me to see like a clear change in cumulative delta, but okay. The 5 years should be ticking up and it's not. In fact, it's stacking more. Yeah. Well, look at that. That's not very helpful. I think I took a bigger loss on that than I should have. So I never actually got favorable ticks on that. We're close to reaching their 3,600 in one day. Well, they were saying like 3,100, right? I think the reality on that trade was that I didn't get a very good spot, was part of it. Okay, now I'm seeing something in the 5 year. Yeah. What? Okay. Was like, okay, so now that is interesting. Okay, so we are seeing a little bit of an order flow coming into the 5-year and pushing it up. I am seeing somebody push against it in the 10-year. So far, it's holding though. But you can see it, like, I tried to sweep them, and almost immediately the flow started coming in the other way. So that's not a good sign at all. Yeah, what the fuck? I'm kind of starting to put this into the category of like, it's not trading against me, but what would it be doing differently if it was? Right? Okay, so there's a stack at 19.5 there now too. That's interesting. See if this long flow keeps coming through. Oh, look, that 19.5 pulled. Yeah, that's good. That's good. And a couple of people rushing in there too when it broke. So a couple of price action traders stopping out there probably. That one tick up like really makes me feel like, okay, so I'm kind of doubting my feelings at the moment, but that tick up like makes me feel like that we are going to go and breach the highs. That seems, I think I'm doubting it because that seems like maybe a little too optimistic, but there was a significant flow coming through there. Especially in the 30-year. Could that be because it was another, well, I don't know. I was about to say if that was another steepener, but I don't think that's what you would see in the 30-year if it was a steepener, right? That you're buying in the 30-year would be more likely to be a flattener. The flattener has kind of been what they've been doing when they're going down. So Ben Shapiro tweets, stock market is now lower than when Joe Biden took office. Oh man, well, the S&P 500, they didn't make it below 3,700, but this bounce off of 37 looks awfully weak, doesn't it? Nick Timmeros, news that mortgage rates dropped 6% might have come as a surprise for many buyers, but not because the rate was so high. House hunters have been encountering rates above 6% as far back as June. That's only now reflected in the widely reported national survey. Okay, so that's a good reach higher. I think they'd still want to get above, like the last pivot high was 24. Oh yeah, you can see it. Okay, so we're good. We're good there. So while that was a really good excursion on the long side, I didn't like those last few ticks down. So I'm kind of getting into this mode of reading big into like every little tick, which may not be the way to play it. It does look to me like there is some long coming through, especially the 30-year. That was like really aggressive, right? Yeah. This is so if we were just trading just on the order flow, this would be really frustrating, right? Because it's like ticking on very little volume, and quite randomly in this range too, I might add. Though the S&P 500 does look like they're going to try and make another breach of the lows. So if it is risk off flows, that might help us. And the flow in ZB still looks good to me. Okay, so that move there looked like flattening. You can see the 5-year reluctant to move back up. That might even be luring there. Oh, it clicked. It clicked. Not a strong bid though. Yeah. Nope. Nope. Not helpful. Whoa, okay, what was that? The way the inside bid and offer are moving here is a little odd. Like it's ticking down and the offer is immediately there on the offer side, but I've also seen a couple of places where it's almost, I don't know if my platform was glitching or something, but it was like where like the change just kind of got reflected all across the board all of a sudden. Like that somebody in the 5 years slamming him down or something. Well, look, there's kind of the same sort of a tick on the upside now. That may just be robots seeing a range and trying to react really quickly when key thresholds are crossed, but You know, it's kind of weird to watch them here, having been traded such a long range and everything this morning, and now all of a sudden it's like fighting for ticks. Yeah. In fact, that tick was... That's taking us down now. Hmm. In other words, I'm kind of starting to doubt that there's actually a really strong order flow that will take us up here now. Like I'm starting to feel like this is market making, and that there's a lot of market making activity going on right now, and that they're looking to trade the volume, but that I don't know, we'll see. It's doing all these sorts of things where, like, as soon as it starts to look like it's going your way, it stops, right? They're playing all of the head games. And when they're doing that, that kind of makes me think, oh, well, maybe we don't have a edge. Yep, how later today? Yeah, in about, like, what, an hour and a half? G95 saying that's what I've been saying. I thought the situation was right for a flow to come through, but it doesn't. It's just not coming. Gotta trade schizo level there after your trades. Yeah. I mean, if there is more to this buy, it's gonna, like, you know, we're gonna give up on it, and then it's gonna come in out of nowhere and just smash them up to the highs. But right now, it kind of looks a little flaky and some spreading going on, but difficult read. Frustrating price movement. S&P 500 hasn't reached their lows yet either. So there's that same thing on that uptick, where it's like all of a sudden all of the robots shift. Is there anything Powell can say which will kill the market again? I'm feeling he has already said everything, which is important already. Well, so I don't know, where is he even talking at? I haven't really researched too much into it because I won't be around at that time, but let's see here. Chairman Powell speaks due to deliver opening remarks at a Fed Listens event in Washington, D.C. He might. Yeah, he might. That's the kind of meeting where there'll definitely be a headline that will come out of it. Whether it's new information is a different question, right? like one of the frustrating things in this market is that it seems to me like the general public is not very up to date with what the Fed is thinking and saying. So, like, every time that he says something, the news and the public get all riled up about it. Whereas those of us that are watching this every day are kind of like, yeah, that's what he's been saying for the last 9 months, you know? It's not new information, but the market does react to it. That's some steepening on the part of the 5-year. It must be nice to be wealthy. He can babble on about how bad things can get. No, you know what? When I watch Powell, I see a man that is trying his darndest and just knows that things really aren't going his way right now. And I think that you can see the weight of the negative impact that this has had on regular everyday people. I think that he really does care about it and that it troubles him greatly. Okay. Yeah. So like when you look at these offers in the 10-year, there was like 1,200 offered there, and then 10 contracts go through, and like almost all of it pulls, and then there's only 300 left. Agreed. He seems stressed. Yeah. It's just. They're never going to be perfect. This is the problem. Like I've always said, it doesn't matter what you do. People will always hate the Federal Reserve. Because one group of people does really well when interest rates are low, and another group of people does really well when interest rates are high. And there are rich people that have money and understand the markets. They can take advantage of both. But otherwise, you get a large portion of the population, if not the majority, that are, having trouble from the interest rate policy either way, right? So it doesn't matter what they do, it always seems like it's the wrong thing. Yeah, part of the reality is that the public's expectation of how good the Federal Reserve should be at its job is probably unrealistic. Okay, so was there another? Okay, now so the flow still seems to be coming in long. You're starting to see the cumulative delta move here in the 10-year in particular now. So I think that this move right up here at the top that's probably some people stopping out. But the 5-year, and it is rising a little in the 5-year. The 30 is still kind of holding back a little bit, but the 30 is very, very close to its daily high, right? So, this could be interesting if they breach those highs. I think that the 10-year itself is probably still like just within retracing until like let's say 113 even. 113 even. That's not the case for the 5-year and the 30-year. 30 years already up. So that means that in the end, regardless of how this goes, that we're still like slightly flatter still. But the 30-year going there like that really helps us, right? All in all, I think he does a really good job. Yeah, I mean, I don't think that he's I don't mean any of that to say that I think he's a bad Fed president or that he does a bad job. It's just that it is stressful when the economic fate of the whole world rests on the decisions that you make, and you know that you can't make perfect decisions, and that the central bank interest rate forecasts. John Philippe has been posting some really good stuff on LinkedIn about these forecasts and basically showing kind of the underlying flaws of them, that basically that these are kind of like linear models and that they're just way too simplistic to really make any kind of good estimation. And I think that the Federal Reserve understands that those forecasts aren't really very predictive, and they're just kind of putting them out there to kind of give people like an idea of the trajectory, and then the general public thinks, well, this is what they think is going to happen and it must be law. You know what I mean? The Fed understands that, and so they're looking at this and they're like, well, yeah, we need to get interest rates under control. Our models show that it could come down, but the risk is that they're wrong, and there's a very high probability of them being wrong, and so we have to push the interest rates high to account for that risk, because if they go higher, it's a lot worse. What? As deal optimism dies, SPACs may have surprising future as fixed income investments? What? Oh, that's interesting. Okay, so we're getting a pullback here again. Okay, this bothers me a little bit. I don't know if this is too political for the current, but Financial Times says this was a momentous legal week for Donald Trump. Trump's terrible week and how the ex-president's legal woes piled up. You think that that's all just a coincidence? Oh, whoa, hold up. They start doing all of these legal investigations into Donald Trump, well, right before the midterm, and just after Joe Biden makes this big speech about how MAGA is like this big threat to democracy and everything. You think that that's all just a coincidence, huh? Okay. Define people by what hobbies they don't have. Golf is an excellent marker. Another is Tom Holland. He harbored an abiding hatred of golf and golfers, so he discovered that any members played the game and they were quietly asked to relinquish their membership. I don't know what the other one it is that Nassim Taleb is referring to here, but I'm not very good at golf. I don't really enjoy it that much, but I feel like I should go and get better at it. S&P not pushing that 3,700 yet. And it's kind of a little late for it too, isn't it? Okay. So there's a big order at 22.5 in the 5-year. You've already traded 310 into that? 11 I don't know. We are gonna have to start thinking about the European close. I don't know if that's gonna be too big of a deal in the treasuries here today, because you know, the Europeans definitely went short, right? And I would hope that anybody that was on that move had taken profits by now, right? So I don't like that, where it's like it ticks down and then he's fighting to push it back up and they can't get it. I think that I have to puke here. Okay. I got one tick better than that. That's okay. Well, if I had taken profits when I had gotten my maximum favorable excursion, it wouldn't have been so bad, but I think that I've been in this for a while. To be seeing a short like that and everything kind of says, yeah, see, I've been messing around with this for almost an hour now. So I think that means that we probably aren't seeing a really strong flow. That it probably is more market making Also, the treasuries turned very much hard short there again. So, like, we got that rise that we wanted, and then when it came down, the selling was much stronger. Was much stronger in the 10-year at least. Actually, I dare say across the board. Yeah. Let's see here. The Bank of England MPC will have to briefly give NR11 time to reverse folly. I presume HMT will make some kind of useless attempt to intervene in the Forex markets ahead of Monday's Asia Open, but I would expect and encourage the governor / MPC to say publicly by midweek that if the Great British Pound is down, that rates up. That's Adam Boson, a former MPC member. Well, that might be what's driving that short flow. If it was Europeans that were driving the selling before, and Europe specifically, then this means that, you know, you're getting a news thing that says go short, right? Although it's still pretty. So, like, it's possible that flow from 24 down was all off of that. Well, not all, but that was the primary driver, and that's all there is to it, is a possibility there. So. When I took the long, I was kind of hoping for the, the flow that we had seen earlier in the morning to like recontinue, basically. Like, the news was past, everything's chilled out, flight to safety. But now I look at it, just looks like noise since the news. They made an attempt to break out to the upside that failed. Mostly, I think I was just trading in noise. And one thing I'm still seeing a bit of is, like, all it takes is a tick up and a pull on the offer, like that right there, for the market makers to shift and the momentum start going the other way. So that, I think, is more indicative of a market being driven by market makers, which I don't necessarily want to be involved in. So let's see, they're tilting to the upside again, right? Spoo's just kind of chilling there at 37.05. I don't think that can last for very long. Oh, what's wrong with my Apple here? Let's fix that. That is really weird. There we go. Nope, it just ticked down. No. Yeah, kind of being sketchy.
That one looked like it was going to switch back down short, but then they didn't hit it. At least not yet. Ah. Aha. Well, now I want to be long again. Gave up too early? Did I really give up too early? Maybe. I'd be up 7 right now. Still, well, there was some volume behind that on the 5-year, but I don't know if that. Is Sterling below 1 now? Wait a second, we're 6B. No, I still got 1.0978. You see maybe a little bit of a hint that the 6J wants to move up. There's 10. It sucks. That sucks, but that does not necessarily say to me that this is really going to do something, right? Like, with the way this has been going, I really want to get in here. Yeah, I do. And then it immediately smashes back down to 112.17 or so. That's how I see that one playing out. This is definitely like playing head games with us though, right? Yeah. Oh, I forgot about the Tesla recall. How are they doing today? Let's go check out Tesla, huh? I don't have it on my list right now. I thought I had it on my list, but I guess I don't. Okay, so now this is even more interesting, actually, is that now they're kind of settling at 20.5 for a bit. That doesn't mean that they won't push up and go higher, but does kind of mean that I probably don't want to take a trade. You've been scalping around a long position today, and ZBN is mostly working out but looking for it to break high. Well, if you had been long earlier, you definitely were probably made some money, yeah. Okay, Tesla. TSLA.
Yay. Tesla. Okay. I'm still kind of sitting here like it's gonna go higher and I'm gonna miss out and I'll be pissed. And my body wants the winner. It wants the winner. I was feeling pretty good when I was up like what 15, 18 ticks. But didn't follow through. Didn't follow through. Listen, like if you want to do a pullback and then go up and go higher, that's okay, but why ain't you just go back up to the high right then and there, right? That would have been so much more fun. Would have been more fun for me at least. Oh, markets. Yep. A little bit more excursion on the downside again here. Okay, so what's Tesla? Oh, man. All you were trying to do was make sense. You might have some opportunities in Tesla. Because there's people that put orders like really far in on the spread, even though like the bigger spread is really wide. So you could hit some of the, if you really knew which way it's going, you could hit some of those and probably, you know, limit order back out. That doesn't give me, where's my other chart? Yeah, that one. Ford, man. Oh, I need to do something so that the cumulative delta does the whole historical bit, but yeah, that thing has just been a dumpster fire all week, man. Whew. Glad I'm not in that one. Okay. Tesla, where are we at? 277. Okay. Okay. Pull that up. Hey, keep an eye on it. Yeah. Okay, so I got out. I could have gotten out with a little bit of a profit. So like here's the thing is that when it went up, I was like, oh, I'm still not sure they were really getting flow. Maybe I should get out. But no, there's still a good chance that they come through for me. I stuck with it. Comes all the way back. I should have stuck with it a little bit longer and tried to have pulled out a little bit of a profit from it because I could be pulling out at least $5 right now. But now when I look at the action since then, it's still pretty choppy and sideways. So I think that this is like it's Friday. It's Friday and it looks like the big traders have gone home. And what's happening here is that you've got a really flighty liquidity that is very liable to pull. And so even a moderately large order ends up shoving it around quite a bit. I think that that's what's really going on. There is somebody with some money kind of pushing it around.
So yeah, that means we're definitely done for the day. Kind of sucks that it was another loser. I really wanted to crawl back some of what we made yesterday, but it's okay. We realized what was going on and dealt with it. We're definitely going to get some more opportunities here. I hope there are opportunities to the long side, though, just because I'm starting to get a little bit concerned about if interest rates get too much higher from here. Like, if this turns into a further bear market, that's going to be pretty historically bad, won't it? I mean, we've already been in a really long down streak. Like at this point, I think it is worse than 2008, isn't it? Because I remember 2008 was like September, October, super, super bad. I missed kind of the, the downside for the summer. That was before I came in. And then, February, March, it bounced right back. So that was only like 6 months. But this has been like this all year, if not into last year a little bit. Although historically speaking, bear markets do tend to be longer than this bear market, I think. Well, another thing I should note is that as we've been going sideways, so is the 6J. S&P 500 is not going sideways though, or they're doing it here now, right? There is a little bit of a bid coming into the treasuries. Although with treasuries touching the lows, I would expect, with the ES touching the lows, I would expect treasuries to be bid up a little bit more than that. So that's another sign that the original thesis for my trade isn't happening. Do you think volume profile and TPO charts are worth learning? Yes and no. So I did enjoy reading John Dalton's book. Is his name John? I forget what his name is. The Dalton book, Mind Over Markets. I do think that they have kind of like a useful way of looking at markets, I guess, that kind of helps you understand why traders tend to trade the way they do and stuff. But like in terms of like actually trading that way, I wouldn't recommend it. Right? So the issue is how much time are you going to put into it, right? So if you go and you start reading that book and you read the whole book this week, this is not a big book, right? Yeah, fine. Go for it. Okay. But like what most people do is they're like, I'm going to be the best volume profile guy ever. And you spend years on it and it's a waste. It's a waste when you could have spent your time trying to understand the current market better, right? So that's the thing that I would always say is like, number one is understand the current market. Read whatever information there is out there that you can possibly find on the current market. Then when you're done with that and you have some extra time, then you can go and look at other stuff. Wow. Chris, you lost 1,300 and went back to break even? Wow.
We haven't moved that much today. You might be. That sounds over leveraged. Wow, Jimmy Oreo, discussion about the UK tax cuts. I've never in my life seen a tax cut I wasn't 100% in support of until today. The way the pound trades seems like they don't like the idea of more debt in the very near term. Obviously, these tax cuts will increase revs in midterm, though. Thoughts? Question? Yeah, I don't like the cuts. You need targeted cuts, man. By the way, did I not have my Oh, yeah, I don't have it. Because I should have heard my little ding. No. Line it time. 8:58, we'll say. Line with 1. Allocation flight. Wave. Okay. Save the workspace. Oh, you've been scalping this range while you've been stuck in for an hour in the treasuries? Or in equity? Or in ES? Yeah. You know, something weird that will happen is like traders go home early on Fridays, right? So usually by about this time, the treasuries kind of get dead. Every once in a while, we'll do stuff that makes it really seems like it's unresolved and like it's ready to do something, and then it doesn't happen. And kind of where that results is that the day traders like myself are in there and trying to think that something is going to happen. But the big traders at the firms, they don't have any block orders to execute or anything like that. So there's not actually a good reason for us to be trying to trade. And that's what happened there. I mean, I took a shot at it. I probably shouldn't have even taken a shot at it. I did lose money from it. So, that sucks. But now from here, it's kind of like probably don't want to trade it. Or if I am going to trade it, I'd be trying to go from the market making side. But that's kind of a tough play. It does at the moment kind of look a little tilted to the downside, though. We'll see. We'll see. Whoa. What the hell? A Utah woman beat breast cancer 2 decades ago, but doctors found another lump. She says the doctor never showed for an appointment, and she claims the doctor's office kept her money anyways and wouldn't offer her a refund. Surgeon no-shows for prepaid procedure. That is bullshit. Man. I don't know why, but for some reason I tend to make more money. Well, that probably means that you're doing more of a market making strategy, right? But the thing that you've got to understand about something like that is that there's a fat tail to such a strategy, right? Now, hopefully you're not doing something where like you have a really wide stop compared to your target and stuff like that, because that makes your fat tail even worse. But like market making in general like has a fat tail, right? Oh, that's great. Patrick Wayland does order flow trading now, huh? Well, that's funny. did he use when he started? Okay, what do I mean by fat tail? I mean that if you look at a distribution of your daily returns, most of your daily returns are going to be like concentrated over this little hump where, you know, most of the days you pull out a little profit, and some of the days you pull out a little loss, but then there are some days where you pull out a really, really big loss. Right? So like if I'm trading this range, right, and I'm able to pull $10 to $20 out of this range here, right? But the one time that it doesn't work out, when you account for slippage and everything else like that, you could probably lose $50 all at once. Is you know, and that might only happen like once a year. But right. So the thing is we don't know what the actual distribution of your returns look like. But just based off of what you're telling me, that's probably what's going on, right? How do you make markets? Well, you build a robot. You build a robot. That's how I would do it. So the way that I would go about this if I was trying to trade this right now is, number one, I would be looking for an area that's likely to range. So that would be something where there's already kind of been some ranging behavior already. There's a little bit of a volume profile that's developed, and like maybe there's been large transactions in the middle. So you got like a liquidity hole with enough volatility that's rotating around, and you can try and scalp between here. And so you could probably put buys and sells at either end of this range and make money, right? And then I'm going to be adjusting my bids and offers and everything based on what I see in the other treasuries. So like I might see a situation where the 10-year ticks down and these other two don't. And so I think that the 10-year is going to tick back up because the others two aren't reacting. They're not going with it. So I want to sit there on the limit and basically get a fill in a situation where the person that's trading against me, you know, doesn't really know what's going on. Like he doesn't understand that we're in a range and that's the end of the range, and that there's this correlation that kind of suggests that that's like a bad spot to take a trade, right? By the way, 6J did take a little bit of a dip down here. So you get that sort of a thing, right? And then the other thing that you would probably do, or what most retail traders do, is you have a really wide stop. So if I'm looking to get from 18 to 20 and I'm looking for 4 ticks, I have my stop like all the way down here at 14. So they really have to go down there to catch me. And it's very, very likely that I am going to get my profit. And if I don't, I can always dump out early or something like that, right? So that's where I was saying, that's where what you're doing by doing that is you're basically taking on risk. You're going to get like a really high win rate in exchange for taking on more risk. When it does fail, you're going to lose twice as much, right? That means that your tail is larger, because if you had a losing streak, for instance, right, your losing streak is going to be twice as big in profits lost, right? So that's what we mean by the fat tail. That's where the problem kind of comes in. So when you say like I tend to make more money out of a range, for instance, and like especially if you're trading the 10-year and it's like down 1,300 and up 1,300, that kind of says that's kind of what you're doing, right? And that's a great way to trade if you're a robot and you're really fast, because the correlation is like a really good edge, right? But when really all you're doing is just having a short target and a really big stop, and maybe you're like using price action signals and stuff like that, you gotta realize that like you think you're making money because of the price action, but the truth is that there's no edge to your strategy at all, and you're just taking on risk and getting away with it for now, right? So that's where the issue with that sort of a strategy comes in. Is number one, there's a fat tail, and number two, it can fool you into thinking that your trade is working when it's really not. Right? Oh, I'm overtime. I gotta go, guys. I'll see you Monday. All right. Say X.